Back in July, I released a video explaining the new 1099K rules for 2025 when the IRS planned to drop the reporting threshold way down. But just around that same time, Congress passed the One Big Beautiful Bill, and the rules changed again. That's why I'm making this updated video. If you want the basics of what a 1099K is, check my earlier video in the description below or the link above in the video. Today, we're focusing on the changes, what's staying the same, and what this means for your side hustle or small business. As a quick refresher, 1099K is the form payment platforms send to you and directly to the IRS, reporting your gross receipts. That means all the payments you received for goods and services before fees. It's not a tax bill, but it makes sure the IRS knows about your income, whether or not you consider it a full business. Now, this is where people are getting lost. The IRS originally planned a phased rollout: $5,000 in 2024, $2,500 in 2025, and then $600 by 2026. Some of those pages are still live today, so you'll see outdated info. But that's not the law anymore. The One Big Beautiful Bill passed in July 2025 completely changed the rules. Again, here's the real rule now. For 2025 and beyond, the threshold for a 1099K is back to $20,000 and 200 transactions per platform. That means unless you hit both numbers on one platform, you won't get a 1099K. This rollback took us back to the old standard many of us remember from before the American Rescue Plan. So who does this affect? If you're freelancing, selling crafts on Etsy, flipping things on eBay, or using PayPal or Venmo business accounts, the 1099K threshold is now harder to hit. But you still need to track your income. The rollback gives breathing room to casual sellers and hobbyists, but serious side hustlers will still cross $20,000 quickly. Important note: credit and debit card payments don't have a threshold. If you're taking cards through a processor, those get reported on a 1099K regardless of the dollar amount. That rule hasn't changed. Remember, a 1099K isn't a tax bill. It's just a record of your gross payments. You still get to deduct expenses, things like supplies, shipping, or advertising. But if you underreport, the IRS's system will flag it because they match your tax return to the forms they've received. Business sales and services are taxable, but personal reimbursements like splitting rent or your friend paying you back for dinner are not. The key is labeling things correctly. If you use a business account or the wrong payment type, it could still get reported. And on the flip side, never try to disguise real business income as personal. That can backfire fast. Some platforms may still send a 1099K even if you're below $20,000 and 200 transactions. They're allowed to do that. And even if you don't receive a form, you're still legally required to report all of your business income. Lastly, don't confuse this with other reporting forms. Starting in 2026, businesses generally issue 1099 NEC or 1099 MSC at $2,000 or more, not $600. That's a separate change, but it's good to know if you hire contractors or get paid as one. Thanks for watching.